One of the most common questions I get from entrepreneurs sound like, Fabrice, if I made so much money, why do I feel so broke? The misconception is that making money and keeping money are two different things. Welcome to Simplify My Numbers, the show for the 765 entrepreneur. 7-figure revenue, 6-figure take-home income, and 5 figures lost to taxes every year. If that sounds like you, you're in the right place. My name is Fabrice Matan. Each episode, we break down real tax planning strategies that help 7-figure business owners legally reduce taxes and keep more of what they earn. Let's stop guessing and start planning your taxes on purpose. Let the show begin. 7, 6, 5, 4, 3, 2, 1. The Simplify My Numbers podcast is for informational and educational purposes only. All right, so before I became a tax strategist, at tax time, I would sit down with business owners and say, hey, I just looked at your P&L and congratulations, you made $300,000 this year. And I would get this look where they would essentially say, but Fabrice, all that is great, but I don't have $300,000 sitting in my bank account right now. So where did the money go? Right? And so business owners have a hard time understanding the difference between profit, cash flow, and wealth, right? And your profit coming from the profit and loss report essentially only looks at revenues minus expenses and gives you what that number is. That is the profit and what you would be taxed on. Very different from the cash flow, which is the money that actually stays after you spend anything that takes cash out of your business. And by anything, I mean not just the business expenses, but also anything that you do to reinvest in that business, whether it's paying down your debt, purchasing any assets, or even taking equity out of it by paying yourself as the owner, by taking draws and distributions. All of that takes into your cash flow. The wealth essentially in the business becomes what you keep in the business, essentially growing that equity inside the business, right? And so the main issue that business owners essentially have is that they don't necessarily understand everything that is taking away from their business without necessarily reducing that taxable profit, that taxable business income, right? So the first thing to talk about is taxes, right? There's so many different taxes that we pay. First of all, the business owner himself will see federal and state income tax on the income that he makes, and then would also have to pay Social Security and Medicare tax on their income, both on the employee side and the employer, because now you're self-employed. So essentially you have to match both sides. But on top of that, you would do the same for your own employees. Match their Social Security and Medicare taxes and pay federal and state unemployment taxes on the wages that you pay them. And then if you own your own property, you probably have to pay property taxes. If you're buying some supplies and material and you're not exempt, you're probably having to pay sales tax on everything that you buy to keep in your business. And so there's a lot of taxes that you get to pay. And essentially the way taxes are calculated for most business owners who own pass-through entities, their business does not actually pay taxes. They have to feel the burden of the tax at the personal level, right? And so it's very difficult to find out that you made $300,000 and that you have to pay $100,000 or so in taxes, right? But the other thing too is what I see a lot of the time is that the cash outflows, right? Like debt refinancing or debt repayments. Essentially, I have business owners that are making a lot of profit and using that profit to pay down their debt because obviously debt is going to be on a recurring schedule. So on a monthly basis, you're continuing to pay that down and you're not keeping that cash flow. So it's eventually making you feel like you're losing money, right? Like you're not really seeing the cash flow stay in the business because you're paying down the debt. Well, when that happens at the end of the year, when you find out how much money you made, you're kind of shocked. But where's the cash flow? Where did the money go? It went to pay down the liabilities that you had. So you could grow the equity in the business, but the cash is now gone because you had to pay back the debt that you once took, either to buy the business, to buy your equipment, right? But the last thing that we also don't talk enough about is distributions and owner's draw. At the end of the day, as your business continues to do well, as a business owner, you don't even realize that you are also upgrading your lifestyle. And so you start taking more money out of the business for yourself without even realizing, using the business to pay for your personal debt, using your business to pay for your car, to pay for your mortgage, those kind of things. The problem is that every time that you're using the cash flow of the business to pay for your personal expenses, those expenses do not reduce the profit of the business. They essentially go on your balance sheet as a draw, which does not reduce the taxable profit of the business. So as you're taking money throughout the year, you're not even realizing that, a few $100s here, a few $1,000s here, a couple trips, a few additional things that you pay for the house, and all of a sudden you actually took $200,000, $300,000, $400,000 in owner's draws or owner's distribution from your business and took all the cash out without realizing that you were reducing cash flow, but not reducing profit. You were reducing wealth and not reducing profit. And so, big difference. Your formula should always be to recognize the difference between profit, cash flow, and wealth, and understand the items that are affecting the profit side of things. Everything affecting the profit is where your tax reduction would really happen, right? And so I think that's the best way that I can answer this to the business owner that is grinding, that is growing the business and just cannot seem to understand why is it that they're feeling so broke. They need to get a better understanding at exactly what their business numbers are telling them, right? And working with a tax strategist is the best way to then figure out how to transform some of those items into tax savings tools, right? How do you transform them in a way that affect your actual profit? How do you have an asset on the balance sheet that then turns into depreciation to reduce the profit of the company so that you don't have to pay the tax on that, right? How do you transform some of your typically personal expenses into business expenses by having an actual business purpose for some of those items, or by reimbursing yourself for some of the things that you're benefiting from, both at the personal level and the business level, so that your profit continues to reduce and your tax liability as well. And so one resource that I also want to mention, that kind of breaks that down really well from the business owner's perspective is a book that I read a few years back called Profit First. And essentially, the business owner who was describing a situation was that exact situation we hear all the time, where he couldn't understand why his accountant was telling him at the end of every year how much money he made and how much in taxes he would have to pay, when he couldn't understand where the money actually went. And the concept was, if you were setting up your accounts in a way where your profit was automatically being put away into a separate account, you could actually see that profit and exactly understand, okay, here's my money, here's what I made. And you can also see the tax liability into a separate account where you can actually know, okay, we've calculated my tax liability and here's the money that I set aside for it, right? And so I think that's a great resource that kind of explains to you some of the things that you can do at your level as a business owner to try to monitor this a little bit well and in an easier fashion, because the profit and loss, I understand, can be hard to understand. And what we try to do at Simplify My Numbers is to try to give things to our clients in a simplified format so that they have a better clue, a better understanding as to what their money is doing and what the business is generating from a profit, cash flow, and wealth standpoint. Hopefully this made a little bit more sense for you, but if it's something that you think you might need more help with, we'll be happy to help at simplifymynumbers.com and give you a few more tips on what you can do to monitor your numbers a little bit better, understanding how the profit affects you from a tax standpoint and how you can mitigate all of those tax issues that you may experience year after year. And we can't wait to speak to you again next time on our next episode. Thanks for listening to Simplify My Numbers. If you found value in today's episode, there are 3 things you can do to support the show. 1, subscribe so you never miss a strategy to protect your profits. 2, leave a review on Apple or Spotify. It helps us reach more founders just like you. And 3, share this episode with one fellow member of the 765 community, someone you know who's working hard but losing too much to tax inefficiency. Remember, your chaos is our comfort zone. We'll see you next time.
This show is part of the ICT Podcast Network. For more information, visit ictpod.net.